Hey everyone, welcome back to We Are Cosmic, the channel where we dive deep into crypto, finance, and the moves that can really change your portfolio. If you're new here, make sure you hit that subscribe button and turn on notifications because today we're talking about something that could change everything for XRP holders and crypto enthusiasts. Trust me, you don't want to miss this. Less than 24 hours ago, something incredible happened at XRP Sydney. Brad Garlinghouse, the CEO of Ripple, dropped a revelation that has made a lot of people in the community very happy, especially those buying the dip under $2 or $3. The crypto market has been struggling lately, and XRP hasn't been an exception. Prices have been going up and down, leaving investors unsure about the next move. But this news could be a game changer. Brad shared a clip where he talked about none other than Gary Gensler, the former SEC chairman. For a long time, Gensler has been seen as someone who was tough on crypto, sending enforcement actions and Wells notices to companies like Coinbase, MetaMask, and Ripple itself. But in this moment, something surprising happened. Gensler personally approached Brad and said, "Sorry, I was wrong." Yes, you heard that right. After all the scrutiny and warnings, there's now acknowledgement that things might have been misunderstood. For XRP investors, this is a major morale boost. Brad didn't stop there. He spoke about flipping the switches, a concept that might sound mysterious at first, but it's actually very simple. Every small progress, every little adoption of XRP and its utility is like flipping a switch. Each switch might seem small, but collectively, they can lead to huge growth. He emphasized that utility is the key. When a crypto project truly focuses on its practical use case, the long-term potential becomes very strong. This is exactly what Ripple is doing, building real-world solutions for cross-border payments and digital finance. We also got updates from the XRP Community Day, where Brad, along with other leaders like Monica Long, spoke about the future of XRP. It's clear that the team cares deeply about the project and the community. Even though XRP is currently consolidating around 1.35, the support from smart money and the larger financial institutions is real. There's a clear roadmap being followed, and these small steps, these switch flips, are what will eventually create an exponential impact. Now, if you're thinking, how does this affect me as an investor? Here's the simple takeaway. If you believe in XRP's utility, now might be a great time to position yourself strategically. Some people are buying on dips, some are waiting for relief rallies, and others are keeping dry powder ready for future opportunities. The key is to stay informed and focus on projects with real utility, like XRP, rather than chasing hype. Now that we've set the stage with the big news from XRP Sydney, let's dive into one of the most important concepts Brad Garlinghouse shared: flipping the switches. At first, it might sound like some tech jargon, but it's actually a brilliant way to understand how XRP grows and gains adoption over time. Brad explained that it's not just about one big move. There isn't a single switch that suddenly changes everything. Instead, there are hundreds, even thousands of small switches. Each of these represents a small win for XRP, maybe a new partnership, a bank integrating XRP into their payment system, or more businesses adopting the XRP ledger. Alone, each switch might not seem like a big deal, but when all these little switches flip together, the result is massive exponential growth. This is where utility comes in. Utility means XRP is being used for real-world applications, not just traded on exchanges. The more XRP is used for things like cross-border payments, stablecoin transfers, or even integration with DeFi platforms, the stronger its position becomes. Brad emphasized that utility is the key to long-term success. Projects that focus only on hype or speculation often fail because they lack this core real-world use. Ripple, on the other hand, is systematically building a network where XRP has actual value in financial systems worldwide. At the XRP Community Day, we saw how this approach is already taking shape. Brad and Monica Long shared updates on partnerships, adoption, and advocacy efforts. Every small announcement, every event, and every clarification about XRP helps remove misinformation and builds trust in the ecosystem. Brad referred to these efforts as flipping switches. Some switches might seem invisible at first, but over time they accumulate into meaningful progress. This strategy also explains why XRP's price action can seem slow or consolidating. While other cryptocurrencies may pump on hype, XRP's value is being built bit by bit, switch by switch. Investors need to understand that this is a long-term game. The momentary dips, like seeing XRP at 135, are actually opportunities to accumulate while smart money observes the broader picture. Those who recognize the importance of utility over speculation are often the ones who benefit the most when all the switches finally flip together. Another critical point Brad made is that this isn't happening in isolation. XRP's growth is being observed by institutional players and even government officials. The White House crypto meetups, for example, bring together the banking sector, crypto leaders, and policymakers to discuss market structure bills like the Clarity Act. These discussions may seem behind the scenes, but they are extremely influential. Each small policy progress or regulatory acknowledgement is another switch being flipped, creating a more favorable environment for XRP adoption. So why should investors care about these switches? Because every step forward in adoption or regulation directly strengthens XRP's market position. When more banks, businesses, and financial systems use XRP for real transactions, demand rises, liquidity improves, and the price has a solid foundation to grow sustainably. Unlike projects that rely purely on speculative pumps, XRP's strategy is designed for lasting impact, making it a smart play for long-term investors. One of the most exciting parts of the recent XRP Sydney event was Brad Garlinghouse's update on regulatory interactions. For years, XRP and Ripple faced significant challenges from regulators, especially from the SEC under Gary Gensler. Many in the crypto community remember the Wells notices, legal scrutiny, and enforcement actions that created uncertainty for investors and slowed adoption. But at this event, something remarkable happened. Gensler personally approached Brad and admitted, "Sorry, I was wrong." This moment is more than just a headline. It shows a shift in perception at the highest regulatory level. For XRP, this is huge because clear regulatory understanding removes one of the biggest hurdles for institutional adoption. Financial institutions, banks, and other corporate players want clarity before they integrate crypto solutions into their systems. When regulators acknowledge a project's legitimacy, it reduces risk, encourages adoption, and gives investors more confidence in holding and using XRP. Brad's comments also highlighted that Ripple isn't waiting passively. They are actively engaging with regulators, policymakers, and industry leaders. The White House crypto meetups are a perfect example. These meetings bring together crypto innovators, banks, and government officials to discuss frameworks like the Clarity Act, a market structure bill designed to provide more clarity for digital assets. While these discussions happen behind closed doors, they are critical. Each step forward in regulatory clarity is another switch being flipped in Ripple's strategy toward adoption. Institutional recognition is another key point. Banks like JP Morgan have publicly noted that crypto could get a boost if the Clarity Act passes. This isn't just speculation, it's a real indication that financial giants are watching closely. For investors, this means XRP isn't just a token for traders, it's becoming a recognized financial tool in cross-border payments and digital finance. Every partnership, every integration, and every acknowledgement from regulators strengthens XRP's long-term potential. Brad also emphasized the power of patience and incremental progress. The flip the switch strategy isn't about sudden moves. Every regulatory win, every partnership announcement, every piece of positive advocacy is a small switch. Alone, it may seem minor, but cumulatively, these switches exponentially increase the project's value and adoption. This explains why XRP's price might feel slow or consolidating in the short term. The real growth comes from systematic adoption and utility, not temporary hype. Another point Brad made is the role of community and advocacy. The passion of XRP supporters around the world, from events in Australia to online discussions, contributes to flipping these switches. Community engagement helps clarify misinformation, educate new users, and encourage businesses to explore XRP's potential. This grassroots support complements institutional adoption and regulatory acknowledgement, creating a multi-layered ecosystem of growth. For investors, the takeaway is clear. XRP's strategy is not speculative. It's structured, deliberate, and focused on utility, adoption, and regulatory clarity. While short-term price movements may seem modest, the foundation being built is strong, resilient, and long-term oriented. XRP is positioning itself to be a core player in both traditional finance and the emerging decentralized finance space. Now that we've discussed regulatory clarity and institutional recognition, it's time to look at the real-world adoption of XRP. This is where the flip the switch strategy truly shows its impact. Utility is the driving force behind XRP's growth, and banks and financial institutions are starting to take notice. When a cryptocurrency moves beyond speculation and becomes a tool for actual transactions, its value proposition changes completely. Ripple has long focused on cross-border payments, which is one of the most practical uses of crypto today. Traditional systems like SWIFT are slow, expensive, and sometimes unreliable. XRP provides an alternative that is fast, low cost, and scalable. Banks can use XRP to transfer money across borders in seconds rather than waiting days and paying high fees. Every bank that adopts XRP for these purposes is another switch flipped, a small but meaningful step toward mass adoption. Brad Garlinghouse has been clear that Ripple's mission isn't just about crypto speculation, it's about transforming finance. By integrating XRP into institutional systems, Ripple aims to optimize both traditional finance and emerging decentralized finance platforms. This dual approach could unlock trillions of dollars in global liquidity, not just millions or billions. That's the scale we're talking about. Real money that could flow through XRP's network as adoption grows. We also saw updates from XRP Community Day and other events, showing that Ripple is actively engaging with its users and stakeholders. Leaders like Monica Long and Brad emphasized how important it is to educate, advocate, and clarify misconceptions. The more awareness and trust Ripple builds, the more banks, financial institutions, and businesses will explore integrating XRP. This is why XRP's growth may appear slow on price charts. It's building a foundation that is solid, systemic, and lasting. Another interesting point is the global reach of Ripple's adoption strategy. From the United States to Australia, XRP is being recognized internationally. Events like XRP Sydney showcase the passion of the community, the commitment of the leadership, and the practical steps being taken for adoption. Each of these events helps to flip switches, not just for awareness, but for actual real-world utility. When people see XRP being used in tangible ways, it strengthens confidence and encourages broader adoption. This adoption isn't limited to just banks. Businesses, payment providers, and even some government agencies are exploring XRP for faster transactions. By creating a network effect, Ripple ensures that every new user or institution adds more value to the ecosystem. Think of it as building layers of switches. Each one may seem small individually, but together they form a powerful, self-reinforcing system that drives utility, trust, and value. For investors, this is the most important takeaway. XRP isn't just another token riding a speculative wave. Its value comes from real-world applications, institutional adoption, and growing utility. Short-term price dips are opportunities, not setbacks. As more switches flip and adoption grows, the potential for meaningful price movement increases. This is why patient, strategic investors who focus on fundamentals could benefit the most in the long run. Up until now, we've covered XRP's flip-the-switch strategy, utility, and real-world adoption. Now it's time to dive into how legislation and macro factors could play a major role in shaping XRP's future. One of the most talked about pieces of legislation in the crypto space is the Clarity Act, a market structure bill designed to provide regulatory clarity for digital assets. While XRP already has a strong foundation, passing this act could benefit the broader crypto market and give XRP additional momentum. Brad Garlinghouse and Ripple have been actively engaging in discussions around the Clarity Act. These discussions often take place at high-level meetings like the White House crypto meetups, where leaders from the banking industry, crypto companies, and government officials come together. The goal is to create a framework that fosters innovation while ensuring compliance and reducing risk. Every small policy advancement is another switch being flipped in Ripple's adoption strategy. Why does this matter for XRP holders? Regulatory clarity can directly influence institutional adoption. Banks and financial companies are more likely to integrate XRP into their systems if the legal framework is solid and predictable. This doesn't just affect price, it affects real-world usage. With the Clarity Act in place, more institutions could start using XRP for cross-border payments, liquidity management, and other financial operations, further strengthening its utility. Macro factors also play a role. Global economic events, geopolitical tensions, and monetary policies influence how capital moves across borders. For example, ongoing conflicts, interest rate changes, or trade agreements can affect how banks and corporations look for fast, low-cost solutions. XRP, with its speed and efficiency, becomes a natural choice in these scenarios. Brad's discussion at XRP Sydney highlighted how Ripple is strategically positioned to benefit from these macro trends while continuing to expand its adoption globally. Another important point is that smart investors are watching these developments closely. By understanding how legislation, regulation, and macro factors interact, XRP holders can make more informed decisions. This isn't about chasing hype, it's about analyzing the foundation, utility, and real-world potential of the asset. Those who position themselves strategically during periods of consolidation may be the ones who benefit the most when the broader market recognizes XRP's value. Brad also emphasized patience. While the Clarity Act and other regulatory steps may take time, they are essential for long-term growth. XRP's strategy has always been deliberate, focusing on incremental progress, utility, and adoption rather than short-term price swings. The combination of legislation, institutional interest, and macroeconomic tailwinds sets the stage for XRP to become a core component of both traditional finance and decentralized financial systems. Finally, the Clarity Act isn't just about XRP. It's about creating a stronger, more predictable environment for the entire crypto market. However, XRP is uniquely positioned because of its established use cases, partnerships, and leadership. The regulatory and macro developments we're seeing could accelerate adoption faster than most people expect, flipping multiple switches at once and creating meaningful opportunities for investors who understand the bigger picture. We've covered a lot so far, from Brad Garlinghouse's flip the switch strategy to real-world adoption, regulatory updates, and the Clarity Act. Now it's time to tie everything together and understand what this means for you as an XRP investor in 2026. First, the most important takeaway is that XRP's growth is built on utility, not hype. Every partnership, bank integration, regulatory win, and adoption milestone is another switch flipped. Unlike many cryptocurrencies that rely on speculative price surges, XRP is focused on creating real-world solutions for cross-border payments, financial liquidity, and decentralized finance. This foundation is what makes XRP resilient, sustainable, and attractive to institutional investors. The second takeaway is regulatory clarity matters more than ever. Gary Gensler's acknowledgement of past mistakes and the discussions around the Clarity Act show that XRP is moving toward a more predictable legal environment. This reduces risk for banks and other institutions, encouraging them to integrate XRP into their systems. For investors, this means that XRP isn't just a speculative asset, it's increasingly recognized as a credible financial tool. Third, macro factors and global trends also play a role. Economic uncertainty, global conflicts, and monetary policies influence the demand for faster, cheaper, and more efficient payment solutions. XRP is uniquely positioned to benefit from these trends because it provides real liquidity solutions and transaction efficiency. Smart investors understand that price dips during consolidation periods can be opportunities to accumulate before the broader market recognizes the value of XRP. Fourth, patience and strategy are key. XRP's approach has always been long-term. The flip-the-switch strategy isn't about one huge event. It's about incremental progress accumulating into exponential impact. Each small win matters. Community advocacy, education, partnerships, and regulatory engagement are all switches that gradually strengthen the ecosystem. For investors, the lesson is clear. Focus on fundamentals, understand the utility, and stay patient for sustainable gains. Fifth, community engagement amplifies adoption. Events like XRP Sydney and other global meetups demonstrate the importance of an active, informed, and passionate community. Every conversation, clarification, and educational effort helps XRP gain credibility. When more people understand and trust the project, adoption grows faster, creating a network effect that strengthens both utility and market confidence. Finally, what does this mean for your investment strategy in 2026? Here's a simple roadmap. Position strategically. Consider accumulating XRP during dips while keeping some funds in reserve for new opportunities. Focus on utility. Prioritize projects with real-world use cases like XRP. Avoid chasing hype alone. Monitor regulatory progress. Keep an eye on the Clarity Act, White House crypto meetups, and other policy developments. They can accelerate adoption. Follow institutional adoption. Watch for banks and businesses integrating XRP. Institutional interest often precedes significant market movement. Stay patient and informed. XRP's journey is deliberate and incremental. Long-term vision beats short-term speculation. In conclusion, 2026 could be a transformative year for XRP, with regulatory clarity, institutional adoption, macroeconomic factors, and a growing focus on utility. XRP is positioning itself for sustainable long-term growth. For investors willing to stay informed and strategic, the opportunities are significant. So, if you're part of the We Are Cosmic community, remember this. XRP's journey is about flipping switches, one small progress at a time, culminating in exponential growth. Stay patient, stay educated, and focus on real-world value. This is how smart investors position themselves for success, not just in XRP, but in the future of crypto as a whole.